Hello guys, in today's video we are going to talk about how does the banks and institutional trap the retail traders in some kind of areas and then reverse the market. So we will talk basically about manipulation in a deepest way. So this is NZD USD in a 1 day chart. Let's just see how many time that the institutional trap traders ingest in this candles like from this to this. As you see here, the market broke a high. The retail mindset, it's just simple. This is a low manipulation, break of structure, come to the test, go higher, retail are buying, and then the market collapse. Strong downtrend. As you see here also, every time the market manipulates, just continue this like a small traps. But this is the big trap right there. Now, as you see the market again manipulate the low. Now it move higher again. This is the same thing. People they will see the fair value gap, this one, this is the fair value gap again, order block. The market just make a small high. As you see there, this is accumulation, smart money position themselves, and then yeah, strong downtrend continuation for this equal lows. This kind of like indication, it show you exactly who the institutional position themselves. For now, let me just give you a quick explanation here. Now you are institutional, okay, and you know that this asset will run to this low, and you want to sell. You cannot just press the button to sell because yeah, this is bad. So now what you have to do is to push the market higher to accumulate your positions in a positive way that the retail will think this is a reversal to the upside, and then you will start gathering more buyers into the market, and then you can execute your sell positions and then manipulate and then continue into your target. This is how the institutional are working, but it's like fractal from the higher time frame to the lower time frame. It's always like that. It's repeatable. But one of the key elements here is this consolidation. Why it's happening? We will see that. And that manipulation. Where it go? Where for it can go? Is it can go here? Is it can go here or wherever? And the basic element here is you need to spot that and then trade after that. This expansion here. This is where you should focus, not this. This is illusion. This is like everyone is trading, buying, selling. Like the market will never go anywhere. Just stay in the range. And yeah, for example, let's see this example here. Okay, this example here. Now, as you see, the institutional are already accumulate. This is the equal law here. The institutional already accumulate here, manipulate that high, again manipulate that high too. Now they are ready to go this. Now you should start trading in this range here to this expansion to the downside. Forgot about this is order block. This is fair value gap. Will this is all? It will turn like a inversion fair value gap. They are not actually the fair value gap that will reverse the market because it just support resistance. I don't know why people make it. This is just support resistance. Support resistance, support. You keep buying, you get smoked. So yeah, this is it. But the institutional, when they know that the market is ready now to go to that low, what they will do? They will create that like structure. Now, as you see here, the market creates a high, creates a low, creates a higher low, creates a lower low, and then create again, wherever. Now people start trusting that idea we are going lower. Now people start jumping because they need to create the propaganda so everyone is selling to can execute again your orders. It's simple. And then, as you see here, this is a support resistance. Now the institutional, what they are doing, it's simply degenerate more stops above the structure, above that high. Okay. When that consolidation is happening, look at the wicks. Everyone is chasing to go to the downside, create more stops. And then when the time come, let's figure out what's happening there. To remove that one. Perfect. Now you have your target. That imbalance, so you can make it as target, that one. First partial should be there, and then the second partial should be there. And stop losses of people are there. They already generated. Liquidity is being generated. It's not like manipulated downside, upside. No, it's generated. It generated like below the structure or above the structure. Now it's above the structure. Now the market maker, what they will do, they will push the market to that side. Now let's go to the lower time frame to understand what's going on. Look, the market maker, look how many people are selling. You see that fair value gap? People are selling. Again, push. This is support resistance. Give them the break of structure. They keep selling. Make them a lower low. Keep selling. This is all opportunity to buy. Look, liquidity sweep, liquidity sweep. Because people are selling, the market more likely to go take them all out. Which means this is opportunity to buy, not to sell. And this is an opportunity again to buy. This is an opportunity again to buy. This is all structure manipulation. That structure too is an opportunity. Until we reach that, look how aggressively we went above that, grab all the stop losses that being generated there through that consolidation, and then we shoot to, to the range. This is a stop hunting. This is inducement now, is out. And then the smart money, they are positioning themselves there, gathering more sell orders, because people they see it as market as break of structure there. So yeah, they expect that the market will go run higher, and then that order block, this order block, just they keep like loving. People love this stuff, and then yeah, the institutional are selling more sales, and here are the same people. They will see this is a liquidity sweep, come back to the range, keep buying. Yeah, the institution again complete more orders. If you put the volume profile here, you will notice that. You will see this is accumulation, this is accumulation. It's all organized, it's all a part of the game. And then yeah, they keep pushing. So your basic trade should be after that market sweep liquidity, and then boom, breakout structure aggressively. This is your entry. Your stop loss should be somewhere like that. And then yeah, the first partial should be like that, and then the third partial should be like that. Now I am looking to that one as more sell opportunities. This is NZD USD. Okay, more opportunities of sell is coming because this is big imbalance. People love that. So yeah, thanks to them. And then yeah, this is like the ideal target for the institutional. As long as we protect that high, we are safe. We are in a sell positions. Okay, whenever the market come back again here, if the market want to continue it lower, where it can go not, it can go something like that if it very aggressively, or it can go something like that to that range and then come back, continue it. This is all it is. They go exactly to where people they believe that it's protected. The way that people see that is through the wicks, through the accumulation. Like now, if the market starts accumulate like that, people will believe that I is protected because structure. Then yeah, the market will manipulate that and then continue lower. This is the ideal scenario for continuation. Okay, you can call it wherever you want. It's not that important, but the thing is you have to consider that the institutional they need liquidity, they need stops in the place that retail is more likely to put it, because retail they need only the reason to put stop loss. but the institutional are not putting stop loss like that. Okay, so the reason is, yeah, it could be structure, could be like some kind of big imbalance. Yeah, could be like support resistance, so people believe that this resistance will hold, so more likely to put stop loss above or below it. So yeah, this is how people actually select their stops. And like imagine yourself now in a winning position. Now you already sell here or here, where your mind more likely to go to where to put stop loss either the above that high, either the above that high, not that high, because there is no accumulation. Once is there accumulation, you more likely your eyes will drawn to that high. So it's more than experience than the logic. Okay, like when the market was here, eventually you see that imbalance, you see this is resistance. So your eyes more likely to you will see, oh, after we break that structure, you will start taking that fair value gap, because the sweep liquidity is some kind of liquidity this, and yeah, you will start thinking to sell like that. But institutional are not. Okay, and look where their eyes is looking, because this is accumulation, and that accumulation comes just from resistance. And yeah, the retail will say, okay, this is protected, this is good, let's go for sale. And eventually, as you see here also, we have a trend line. So yeah, the retail will see in a stop loss above the trend line or above that high is very like protected, and the way it is. So yeah, the institutional are like scanning that and knowing that high is more liquid, and yeah, you should draw the price to that level and then grab your stop loss and then continue to the opposite direction. This is like the reason why the market is doing the thing. That's why whenever you see break of structure, most of the time, yeah, you will get in a position, yeah, you will screw up because of this logic. So any question that you will have, you can put it in the comment below, and make sure you like and subscribe, and yeah, let's see for the next video.